Hello and welcome to the Accendo Trader Group. This is our weekday trading plan for Monday, March 1st, 2010. Our website is blog.accendotraders.com, where we put together effective video technical knowledge trading plans on a daily basis. Trading plans keep us focused and centered and abreast of what's coming down the market that affects our current trades and as we scan for new trades. And it cuts down our research time so that we can spend time with family. And the day that was, well, the market ended up today. A lot of it had to do with some merger news from across the pond. A German company, Millipore, drug company, was going to acquire Millipore. There was also European insurer Prudential looking to buy some of AIG's insurance companies. So that started the market off on a positive. Now, what's interesting about today is we talk so often about the relationship, the inverse relationship of the dollar and the market. So the market was up today, but so was the dollar. So that was interesting. And also, we also talk about financials and that they need to move higher for the market to move higher. But today they didn't really break through. So it was really a tech stocks. We also had on Friday, Sandisk improved their outlook for the year during their conference last Friday. But the market is still struggling basically at the 50-moving average for the Dow and S&P 500, some key resistance levels, and we weren't able to break that. As far as the economic data, we have personal income increase, but it only increased 1% versus the 4% that we're looking for. However, personal spending increased 5% instead of 4%. The ISM manufacturing came a little bit low at 56.5. They were expecting basically 57 and 58 range, and construction spending decreased January month over month. All of our sectors in the positive for today, and as we already talked about, all three major indexes were up, but we need to look at the internals, look on the side and see what that's showing us. No real important earnings today. We did have an upgrade on Sandisk off of that outlook that they had last Friday. We also had a target raised on RIM to $100, and Abercrombie & Fitch was downgraded. As far as tomorrow, we have auto and truck sales. As far as economic data, no real earnings. We got Hovanian housing sector, but that's not really going to affect the market. And here are our split plays that we are watching. So here we're starting off with our visual of the market. We're looking at Finviz, and we can see that the Dow was up, the NASDAQ was up, and the S&P was up, which is certainly good. And we can see that we had 70% advancers, 95% of stocks were advancing to new highs. Plenty of stocks over the 50 moving average, 61%, even more, 70% above the 200 moving average. It's all great. But also, and this is what I want to talk about when we look at the internals in the next section, but you can see that internally we had some bearish divergence from what the market was doing. When we look at our Rubik's Cube, again, we can see the strong tech sector here, and we can see it's nice and green, but where is not green, and that is the financial sector. The financial sector is not as beautifully green as the rest of the market. So overall, we've seen a great day, but I do have some concerns about the internals, so let's take a look. So here we are looking at the internals, and we see a couple things. First and foremost, when we look at the NYSE, you can see that we are at 78%, basically, rounding up, of the volume of Friday. So again, we had a positive day, but the volume didn't give it us. I mean, our volume is really low here. Yet the NASDAQ, the NASDAQ volume was fine. So that again gives us some concern, and that also explains to us possibly why we had the financials in the S&P not leading us, because we didn't get a lot of volume behind them. The other thing to note is that we did get a little tick up in our put calls, which means we had some puts being bought today. We're close to that 1-to-1 ratio. However, again, with our mixed signals, is that our VIX went down, and if our VIX goes down, that means the fear in the market is going down. So we've got a lot of mixture going on there, and which one do you want to believe? I always put some heavy credence on volume, and our volume certainly was very bullish as far as we did have more buying than selling volume, but we didn't have a lot of buying going on the S&P and on the NYSE. Okay, so here you can see we are basically in the middle of our November-December consolidation range, and that's totally fine. It also puts us right here at the highs of February. Again, very fine. But it's also at a resistance level when we get to the monthly chart. So again, either we're entering a new consolidation pattern. Again, are we putting in a new higher low? Or are we putting in a new, lower high? Or are we putting in a new higher low? If so, I certainly would put alerts around the wicks here. So that's at 430. So maybe 10,425, definitely above today's wick. To see if we can get a confirmation. But remember, we still have 10,500 looming from last year as hard resistance. Yes, we did finally broke it, but we broke a lot of it on lighter volume. So we've got 10,425 and 10,500 looming above for us for the Dow Jones. Now switching to the NASDAQ. Here we get a real good look at the strong move of the NASDAQ. One thing we were talking about was this gap area as being possible resistance. And we also were talking about the 2250. And we clearly broke right above that. And what's good again is that we did it on volume. So now what we have next on our list, of course, is the January highs. A little consolidation, basically where we're at. If you go back over here and draw all the way over to where we are now, that's basically where we are. So if we can break this 2275 level, that's definitely going to put us towards the January highs. Next to the S&P 500. Now with the S&P 500, we also see a good move here. Basically coming to this almost to our 1120 resistance level that we were talking about, 1115 that we also talked about yesterday, and that's basically right where we close. You can see the decrease in volume, but overall, this certainly does look like a new higher low. That definitely looks like a definitive higher low. First of all, we've got a new we've got a new swing high, so that certainly looks good. Certainly looks bullish. And our next target from here, just on the daily chart, would be probably in this range here, which is 1130. Now, okay, so here we are on the monthly chart, and you can see we still have the resistance of the 50 moving average, although today's action certainly did bring us right back to it, which is certainly good. And then what we were watching for after that is this 10,900 level that gets us messing around with the swing highs of 05, swing lows of 06. So this 05, and it also gets us close to almost retracing that whole move down in 08. So breaking the 50 moving average, and again, what psychological boost would that be for us to break above the 50 moving average and close above it? On the S&P 500, we can see that we are still below the 50 moving average, and when we go over here, we can see some swing highs here. That's at 1200, so that's a little bit too far away. The 1150, what's interesting about that, of course, is that puts us right at the 50 moving average. So clearly for the S&P 500 on a monthly chart, we really need to clear the 50 moving average. On the NASDAQ, we are already above the 50 moving average, and what's great about this is testing the January highs, which is great, and notice how that matches up with the 06 highs, swing highs, a little swing low here, and 07, 08 swing lows. But once we break that, I mean, our next target is we're getting closer and closer back to the highs of 07, but if we can break above where we are right now, certainly our next target is close to 2,500. We're ending with our education portion of our video. We're using the book Trade Your Way to Financial Freedom by Dr. Van Tharp, and we're talking about the legend of the Holy Grail. And what we talked about over the weekend was that so often we get these pitches about use the breakout strategy or use the CCI strategy or the Keltner strategy, whatever strategy that a lot of people do. A lot of traders will read one article and get a piece of the information and then try to trade it and maybe make money or lose money. But there are some questions you have to ask for every system. You know, again, how do you protect your profits? How do you know when to take the buy signal and not? Is this system good for all markets? All things that are important that are usually not included in these free articles. But more importantly, even if you know the answer to those questions, what Dr. Van Tharp is saying is that when you pull those pieces together, you still have to ask yourself, does this trading style, this trading system fit you? Because again, if it doesn't fit you, you're not going to be able to implement it the way that the designer intended, and thus you're not going to make the money, you're going to be frustrated, you're going to blame the system. But again, it really comes down to your trader's mindset, and you want to make sure that you have a system that fits your personality, your risk tolerance. And that's how we can avoid looking for the so-called holy grail when we focus on ourselves and focus on the system that fits us. So today, you guys know about our partners. We have our futures trading room, and I've got last week totals up there. Last week on Monday, 1,000 all week. Basically using 3 contacts per signal called. So certainly you can see the profitability. And we got a great futures broker for you. Any minis large low as $300, and we got a 23 contacts if you sign up through us. Click the link also there. We have a demo for you. Great trading platform, and we have a futures trading plan. Again, make sure it fits your personality. Again, make sure you realize that you can lose all your money. And we want to thank everybody for their support, and we will see you guys tomorrow.